What's up, everyone? It's Scotty with MoneyVest. So tomorrow we've got the Fed meeting. So that is going to be very, very important. So May 1st is when we have the next FOMC announcement. I'll break down in another more separate, more dedicated video all the expectations and what we are looking forward to from the Federal Reserve, because there has been a little bit of a hawkish tilt in the last couple of months here after we have seen a little bit of a hotter than expected inflation number. And of course, a very, very, very strong economy in the US as well. So we got lots to unpack. The markets here on the day were higher, so we did push up a little bit, but Tesla, of course, charging higher on the great win, on the huge win in China, and Beijing, of course, approving of the driver assistance program. So we got lots to discuss in this video. As always, if you enjoy it, find it helpful, make sure that you drop a like, and don't forget to subscribe to the channel. If you're just joining us for the first time, I would really appreciate that. And again, links to our Discord and Patreon is going to be down below if you're interested in joining. Today is quite literally the last day. Today is April 30th. If you want to take advantage of that 16% annual discount, today is the day. I opened up a few more spots, and you can access all the Discord channels, including all the trade alerts and trade ideas, and all the 49 to 50 members only private videos, including the 30 stock shopping list that I have with my buy targets, as well as our MoneyVest index, which I did a video on yesterday, which has been very, very helpful in my decision making. And I think it's going to be a game changer for you when you are looking at essentially understanding risk reward and when it comes to trading and investing, and kind of getting an idea of when it's time to actually be a little bit more aggressive versus be more cautious and alert. I think that indicator works like a charm, and you will see that over time. So again, links going to be down below. 16% annual discount expires today. A few more spots left. Feel free to join. If you have any questions, let me know. So tomorrow, again, we've got May 1st, Wednesday, is when the FOMC announcement is going to happen. So that's going to be from again, Jerome Powell, and we will be live. So I will obviously be live to cover that. Right now, it is still Tuesday, so I want to be very clear. This is not tomorrow as in Tuesday, April 30th, but this is going to be on Wednesday, May 1st. Wednesday, May 1st is when the FOMC meeting is going to take place, and of course, Jerome Powell is going to be talking. So markets on the day, in anticipation of those expectations, very, very flat. So we did have S&P pushing up over 32 basis points, so up to 5110, and the NASDAQ here just hovering under 16,000 points, and the Dow Jones also up over 38 basis points. So overall, it was quite a flat day for the markets, pushing up over 20-30 basis points. Again, nothing crazy, but this is really where the excitement was. Tesla back to its good old days, up over 15%. So it's been a while since we've seen a 15% rally in one day for Tesla. A lot of people know Tesla has had many, many 15, 20, 25, 30% days in its past in 2020, 2021. But of course, 2022 was pretty brutal, and it's still yet to recapture its all-time highs of well over $400. It's still close to 50% down from its all-time highs, but this is still progress, and I'll go over that again. Tesla video is coming out later today. I still have to break down the earnings and, of course, the catalyst from today, which resulted in such a massive move. Apple here back to 173, up a little bit over 2.4%. AMD pushing higher. Amazon also pushing up 75 basis points. NVIDIA's basically flat. And we did have, of course, Netflix, and more specifically the communication services sector like Meta and Google. They were both down anywhere between 2 to 3% respectively, and Microsoft also rolling over about 1%. So a lot of momentum and a lot of liquidity kind of flooding into Tesla. And again, huge win for Tesla and Elon Musk over the weekend. China approves of the advanced driver assistance features. Stock was up pre-market 9%, ended up being up 15%. So Tesla CEO Elon Musk made a surprise visit to China over the weekend, and he got a big reward for his effort. He received official approval from Beijing to introduce advanced driver assistance features in the company's cars. And the Wall Street Journal reported, citing people familiar with the matter, and it's a big deal and something Wedbush analyst Dan Ives had said would be a watershed moment for Tesla as well. So this again is basically the entire thesis coming into play, and that is FSD, full self-driving driver assistance program, being launched. And again, that's a huge deal for Tesla and for its long-term revenue generation as well. Now, moving over to the markets, what happens if the S&P, of course, if the S&P 500 sees a 10-year Treasury yield? What happens to the S&P 500 if the 10-year Treasury yield cracks above 5%? I did a bond video, so make sure that you do check that out. I did a video on TLT and TMF, and more specifically on the bond market. So I think that's going to be a very, very important video for everyone to watch, because it's going to really go over the CBO's estimate, so Congressional Budget Office's estimate of the next couple years all the way through 2034, what the net interest expense is going to look like, how much national debt, what is going to be the whole situation with the issuance of bonds, because if there's more supply and the demand is not meeting up to that supply, yields are going to go higher because prices are going to come down because of the inverse correlation. And for the 10-year Treasury yield, the next major key level is the 5% level. And Wall Street definitely won't be applauding the milestone. And this, I believe, was from, again, one of the strategists. The yield stands at just over 4.6%, almost a full percentage point higher than its February low of 3.8%. And driving it higher are two things: hotter than expected inflation and the expectation that the Federal Reserve won't cut interest rates in the short term anytime soon. So this was, again, John Kolovis, Chief Technical Strategist at Macro Risk Advisors. At 4.6%, the yield certainly within striking distance of 5%. That is the next target. That's what I've mentioned in our charts. So if you come over to US 10Y, we've been talking about this for quite some time, and that is the next threshold. As you can see, the 5% level, and that's the same level from back in October of 2023. We've seen a very, very nice move to the upside. Mentioned that in the bond video, so definitely do check that out, the TLT TMF video that I did. I think that's going to be a little bit more interesting. It's going to give you some more clarity as to what I'm waiting for. I do have plans of getting back into TMF or TLT, but that's only after I see a little bit more upside on the yields, considering how much supply, how much issuance there is still left in the market because of all the deficits that the US is running right now. The yield rose to 4.7% twice in April, then it promptly dropped because too many buyers showed up. So that's another thing, right? Higher the yields go, higher, more interesting and exciting it becomes, because a 4.6% locked for 10 years is a very good rate of return if you ask me, especially if you consider inflation is going to be lower. So on a net basis, you're going to be generating a higher real return on your investment, because inflation is going to be probably lower. If you were to assume over the next 10 years, it's certainly not going to be over 4.55%. I mean, it could be, but the idea is that it's going to be lower because of higher interest rates that we're seeing. And the real return, which is the gross return, 4.6 minus inflation, that's your real return. It's going to be much better. It's going to be net positive. And for that, it's going to entice a lot of buyers into the market, which is going to increase the price and drop the yields because of that inverse correlation. So that's why a lot of buyers showed up. And this time, if sellers are front and center, they would push the price down and yield up, and that would drift higher at 5%. And that would obviously a big problem for the markets, because right now, if you take a look at the S&P 500, which trades at about 20 times earnings on a 2024 basis, then we're really just yielding about 5%, which is, again, not that much of a premium, risk premium, as we like to call it, equity risk premium against the 10-year treasuries, which is the risk-free rate. And if the yield rises above 4.7%, the S&P should fall to 4,800 from its current levels of about 5,100, based on the correlation between the index and the bond yield in the past few years, is what they mentioned. And a yield above 5% would send the S&P 500 to 4,500, a 12% drop from its current levels as well. So they are not wrong. I mean, there is a possibility if the yields continue to rise, which is going to be a problem for the market, as we have already discussed, because the equity risk premium continues to diminish and comes down to 0%, and at some point could become even negative if the 10-year treasuries rises above the 5% level. And it's all math, it's all logic, right? If the S&P 500 right now is yielding a 5% earnings yield because of the multiple that it trades at lower prices, its earnings yield is going to go up or down. Pause this video and comment and think about it, right? So if the price goes down for the S&P 500, its earnings yield, will it go up or down? I want you to pause this video and answer in the comments. Take your time, take a couple seconds, and the correct answer is it's going to go up, right? So if the S&P 500's price goes from, let's say, 5,100 down to 4,500, so we see a 12% correction in the S&P, its earnings yield is obviously going to go up, right? So it's going to go from 5 to 6% to 7%. And then at that point, it's going to start becoming attractive once again to be in equities, because the yield are, let's say, at 5% and you're getting a 6% earnings yield. That's the 1% equity risk premium that you're getting on top of the risk-free rate. But right now, as it stands, 4.6% for the treasuries and 5% for the earnings yield. There's only about 40 basis points in equity risk premium. But I also know that, Professor Demodran and some other valuation, strategists and analysts look at the earnings yield and, of course, look at the overall return and the equity risk premium in a very different way, because they look at the forecasted earnings and they also combine that with the dividend yield. And that's how you get, a closer to 7 to 8% expected return, investing in equities versus a 10-year treasury sitting at 4.6. So that equity risk premium could still very well be in the 3 to 4% range. So it just really depends on how you look at the markets, how you view different asset classes and their potential investment returns. But for me personally, it still makes sense, obviously, to be more in equities, be more heavily weighted towards equities, but not at, super high prices. So we're always looking for better deals and risk reward ratios that are going to be aligned with what we're trying to do. And that is where the MoneyVest Index comes in. That's where our analysis of the technicals and fundamentals and macros come in. And the U.S. economy is actually a wolf in sheep clothing, and as the weak GDP report masks underlying strength, Wells Fargo says. Now, this is a headline that I wanted to go over because, yes, it may very well be a wolf in sheep's clothing, meaning that it's actually very strong. Underlying factors are very strong, even though the GDP numbers came in a little bit softer. But that's not necessarily good news, because if the economy continues to be strong, what are we not going to get? We're not going to get rate cuts because the economy can continue to handle higher interest rates for longer, and the Federal Reserve is going to use that. They're going to continue to utilize or punish the economy for being too strong and not allow for rate cuts if inflation doesn't come down fast enough. Something that I've been saying for the better half of 6 months, 8 months now, that if inflation is sticky, if inflation doesn't come down fast enough, the Federal Reserve and this person, Jerome Powell, is going to rethink. He's going to need an incentive to actually cut interest rates, because they only pivot to fix something. They don't pivot for the sake of pivoting. They're not going to go from quantitative tightening to quantitative easing without anything in return. They need an incentive. And right now their incentive is not there. Inflation's still high, economy's still strong. So neither of those two things, dual mandate, neither of those two things basically are suggestive of a rate cut or quantitative easing. So this right here is Bloomberg's index of tracking 60,000 headlines, and they're saying about the Fed's next move. And what they have done is that they basically track overall sentiment by looking at a lot of different headlines. And you'll notice that the Federal Reserve's dovishness to hawkishness, it has been coming down. So that is good. In other words, they're becoming more and more dovish, or they're kind of warming up to the idea of potential rate cuts. But then what you'll notice is that more recently, though, after the hot March job and inflation number, Jerome Powell is becoming a little bit more hawkish once again. This right here was the Powell's December pivot in his tone, in his overall sense of, just feeling out the idea of potential rate cuts. This was the big drop. Which essentially resulted in the S&P 500 doing what? Going like this, right? Essentially going up, up, and up after the December pivot from Jerome Powell, because since the beginning of this year, we've seen a very strong rally in the market. NASDAQ, S&P 500, they have continued to push higher because of what Powell said during the December meeting, and they were more open to the idea that rate cuts are happening in 2024. They even mentioned that in their summary of economic projections. In fact, 3 rate cuts were being penciled in, but now we're starting to see a little bit of a different tone because of higher and more stickier inflation. This right here is the dovish surprise. Powell's December pivot shifted focus to easing. This right here was the big shift here that happened in December, but last couple months, really what we have seen is a little bit of shift back to more hawkish terms, more hawkish, verbiage, more hawkish statements, everything that we have learned from the testimony to the speeches to a lot of different events that Powell has visited or, been speaking at. It is what it is, right? And that's all part of the equation. It's all because of inflation. Inflation has been one of the most leading indicators in the last 2 years for the Federal Reserve, so that they can actually decide whether to cut rates or raise rates or to keep them where they are. And this right here is market's expectations, which has been lowering for rate cuts. So you can see that back in December of 2023, the markets were pricing in for as many as 3 to 4 rate cuts. So we were expecting about 150 to 200 basis point cut by January of 2025. And the blue line is as of April 25th, so it's a couple days ago, and you can see a significant drastic shift back upwards meaning that we're now only expecting a 35 basis point cut. So just one cut, max two cut, and that's not even starting until the middle of the year, which is going to be about May or June. June cut still in play, or July cut, I should say, still in play. But earlier it was at the beginning of this year, and more cuts were being priced in. So that's how the market expectations have shifted out of a quantitative easing and a lot of rate cuts to now fewer rate cuts and expecting inflation to be a little bit more elevated. This right here is the last 1 day. So Apple pushing higher, of course. We already covered the comm services sector, struggling. Tesla up 15%, very strong move. Amazon up 75 basis points. In fact, I sold a couple of covered calls on Tesla, profited, just a little bit over $1,000. I don't plan to rebuy them back or cover them because, I strike 225. Got about a month. I mean, Tesla's going to find a lot of resistance and a lot of supply in the 200s. So I feel pretty confident that those calls are going to expire out of the money. But of course, you never know. But even at 225, I'm comfortable kind of lightening up on the position a little bit because those are the shares that I do hold from a lower cost basis. So I don't mind kind of exiting a little bit of Tesla and raising some capital for this stock if it gets up to 225 in the next 1 month. If it doesn't, that's great. I keep the premium. And of course, I keep my shares. This right here is going to be the last 1 week and the last 1 month. So 1 week, I mean, Tesla has been crushing it up over 36% in the last 1 week here. Apple, Google also pushing higher. Meta's obviously struggled because of earnings. NVIDIA's up over 10% in the last 1 week. And in the last 1 month, it's really only Tesla and Google's world. And we're just living in it because they're both up over 10% in the last 1 month. Huge outperformers. Meta's down about almost 11%. Microsoft, NVIDIA, AMD's down about 11% in the last 1 month. Apple's basically flat. Amazon's basically flat as well. So comm services having a not so great day. Everything else was green, which is good. In the last 1 week, everything is up except for financials. And 1 month, we have seen a little bit of a split market, but more red than green. And this right here, 1 day performance on futures and commodities, sugar prices, natural gas, coffee, canola pushing higher, cocoa prices, silver pulling back with orange juice also down, and Bitcoin just over 63,000, Ether just under 3,200 as well. If you come over to volatility, we're continuing to see that crush back lower, now sub 15, down about 2% on the day, and we're basically back. I mean, we're back to that range between 12 and 15 levels. I mean, that's where we were for the most part of 2024. And we're essentially coming back down, and that is going to be that red rectangle to keep in mind. We did get up to as much as, let's say, 21. Moneyvest index came down to sub 3. That was a buying indicator. That was simply a buy signal right there. Mentioned that in our Discord, and also did a couple videos. Get ready with cash. This is your buying window. This is your buying window. Mentioned this a couple times, and of course, volatility dropping back lower, markets recovering a little bit back higher, which is good news. And the next time the volatility is higher, again, use that opportunity to your advantage and dollar cost average and buy back into the market as well. Coming over to Bitcoin. So again, lots of consolidation sideways. So no new updates here because we are still trading in between that range between $62,000 and $72,000, and Ether also just trading sideways in that range with a resistance at 36,700, support at 28,900 for Ether as well. Coming over to crude oil, we're seeing a little bit of a pullback again. So somewhat of lower highs being formed on crude oil. So this right here, boom, boom, previous high, this high, lower than the previous high, and there's a little bit of a potential head and shoulders also forming for crude oil. Something to keep in mind, the neckline sitting at $81, so that is where the support will be. Left shoulder, head, and then a potential right shoulder formation, and like I said, the neckline $81 per share for crude oil. So if you do see a breakdown, that's obviously going to be good news for inflation, and the next support is going to be down in this range at $73, $72 per barrel for crude. Coming over to the market, so NASDAQ, so this is the 30-minute time frame, as we have already discussed. A lot of consolidation sideways, so it didn't really move much, but the support level is getting validated, which is good news, 15,900. So this is the overall technicals that we shared with all the members and of course with all of you in the previous videos. You'll notice lower highs and lower lows, massive resistance here, so not able to break out over 16,500. Broke down pretty aggressively here, so this was the big breakdown for the NASDAQ, then rebounded a little bit. We're starting to make some higher highs and higher lows, which is good. And now we're just hovering over that support of 15,900. So that is the level to keep in mind with a resistance at 16,000, right? So 16,000 is going to be another very, very important level of resistance to keep in mind. So that's going to be sitting right there, 16,080 to 16,100, a level to keep in mind. So that is going to be that level. Previous support and also previous resistance a couple times gotten rejected for the NASDAQ at those levels. S&P 500, same exact story. So we are actually now, looks like we're starting to break out a little bit higher. So this is good because we did get up to this level of 5110, 5120. So if you kind of scroll back a little bit, you'll notice that this was a previous resistance and a little bit of support here, a little bit of support here. So we're starting to kind of break out of that level, which is good. And the next target now is going to be 5167. That's going to be about I think about 0.5% or 1% higher from where we are. But tomorrow we've also got, Jerome Powell's speech. So May 1st, Wednesday, is when we have the Jerome Powell speech and the Fed meeting, and that's really what's going to dictate where we go next. And support level is going to stay put at 5,080 all the way down to 4,900, 4,950 to be precise. But overall, we're making higher highs and higher lows, so that's actually good news. Talking a little bit about Apple. And Apple here also pushing higher. The trade idea still working out to some extent. We didn't quite break down below this support of 163. Mentioned this in our community that 162, 163 breakdown below that level is where the stop loss is going to be. We're starting to again show some signs of progress. Again, very oversold. Institutional involvement continues with those yellow bars suggesting for some banks, some whales kind of entering the stock here. And the next resistance and target is going to be all the way up to 195, 196 for Apple. Talking a little bit about Amazon, and Amazon here again, resistance and targets up to 188. Support level is going to stay put at 171. Still trading within this uptrending channel of higher highs and higher lows. So that is very solid, very good. All the way down to 159 to as low as 143 for Amazon moving forward. Talking about Tesla, and Tesla here pushing higher very, very nicely. So higher highs and higher lows possibility here. Again, RSI moving up, MACD moving up, L3 banker oscillator also suggesting for more upside. But we've got a huge resistance here now for Tesla in the 200s. And only time will tell, of course, whether we're able to break out of this supply and this resistance at around this $204, $205 level or not, or if you get rejected here. So really inside this red rectangle is where that resistance is going to be. And I will be doing a separate video on Tesla later today. So that will be posted. And the next target really beyond that is going to be sitting roughly at around 230s and 240s for Tesla moving forward. Talking a little bit about NVIDIA. So NVIDIA also recovering, breaking outside of this downtrending channel. So that's good. Validating that support at 845, resistance and targets back up to 908 to as much as 970 for NVIDIA, and support level is going to stay put at 740 for this company here. Advanced Micro Devices also moving higher. Mentioned this as a potential trade idea in one of my previous videos. Very strong support and massive demand here inside this green rectangle, and resistance is going to be all the way up to 164 to as much as 183 for AMD moving forward as well. Very, very oversold, so seeing some very nice momentum higher and progress back up to that resistance of 164 for Advanced Micro Devices. Talking about PayPal, and PayPal is going to be reporting earnings, I believe tomorrow, right? So yeah, so Tuesday, April 30th. So I believe they're reporting pre-market. Either way, I think tomorrow is going to be a very, very important day for PayPal. It is already moving higher, 1.5%. A huge resistance and target is going to be at $68. So that is going to be inside this red rectangle. And of course, if we do see a breakout above this level, the next target is going to be at $76, $77 per share for PayPal moving forward. And I do expect some pretty good numbers from the company. I mean, they've been doing really well, $7.5 billion revenue expected, 1.2 EPS, that is the number, and we really need a breakout above this resistance of $69 to as much as $70 per share for PayPal. And again, a breakout is going to potentially send us on that target of $77 for PayPal as well. Visa, on the other hand, seeing a bit of a pullback, of course, as we have already discussed. Resistance is going to stay put at 290. Support level is going to stay put down to 265 for this company. Very, very strong business. I've already done a couple of videos on Visa already on the channel. Talking about Meta platforms, and Meta's still struggling. As we discussed, it's got a huge resistance wall supply here, 450s down up to 475. Support level is going to stay put down to 387 for this company. And again, a lot of consolidation sideways after the gap down on earnings, even though they beat on EPS and revenue. They're still kind of struggling at the moment after the gap down because I think the valuation was a little bit up there, and it has had, of course, fantastic 2023, and so far in 2024 still up, I believe, year to date, 23%. So it's done really well. Support level is going to stay put down to 386. Talking about Netflix, and Netflix here consolidating sideways after the gap down, really just trading in that range, 536, 537. Is going to be that support with a little bit of a gap to fill here to the downside. Resistance is going to stay put at 596 to as much as 636 for Netflix, and again, all the way down to that support of 473 for the company. Google, on the other hand, also pulling back 3% after being very, very overbought, and of course, huge gaps to fill on the downside. It was kind of like in that no man's land when it kind of gapped up to all-time highs, and support level next is going to be staying put down to 161 for Google. Not a buy for me right now at these prices. Microsoft, also not a buy for me at these prices at the moment. 397 is going to be that support. Really, it's been, more consolidating sideways than anything else. Resistance is going to stay put at 417 to as much as 430 for Microsoft. And of course, if we do get a breakdown below this, next support is going to be 364 down to 350 for this company. And then finally, we come over to Enphase and Costco. Enphase here up 1.7%. Still very much in the context of this downtrend, so lower highs and lower lows. And support level is going to stay put down to 106. Resistance all the way up to 138 for Enphase. And then finally, we come over to Costco. Costco also seeing a lot of consolidation sideways in that range. Resistance is going to stay put at 747. Support level is going to stay put at $703, $704 per share for this company. So hope you all enjoy this video and a complete update on the markets. Again, Wednesday, May 1st is when Jerome Powell's speech happens. I will be live to cover the entire event. PayPal earnings tomorrow. Tesla video, Enphase video, a lot of FANG stocks and their earnings videos are going to be coming out. I've just been super occupied with our MoneyVest software, as you already know, because it's completely bootstrapped, and we're making the most of the limited resources that we have at our disposal. That's why it's taking a little bit longer. That's why it's taking a lot of time and a lot of hours. But eventually, once it's complete, and by complete, I mean it's going to still take a lot of time to be fully developed, it's going to be something that's absolutely amazing. You have a lot of data points and everything at your disposal to make the correct decision when it comes to your investing career and journey. So hope you all enjoyed this video, found it helpful. Make sure that you drop a like, and of course, don't forget to subscribe to the channel. Links to our Discord and Patreon is going to be down below if you're interested in joining us. Again, limited spots left with that 16% annual discount that expires tonight after April 30th. So links going to be down below. As always, happy investing. I'll see you all in the next video.